In trading, a point of interest is a specific price level on a chart that indicates a potential support or resistance. It's often where large orders are likely to be placed, leading to a significant price reaction, right? So basically, it's just simply saying that, if we are basically going to look at an area of support and resistance, that is not necessarily just saying that, hey, the traditional way of looking at it, right? Hey, an area of support like that, or just simply an area of resistance like that for some beautiful shorts finding itself opening up, right? But more like the principle of an area of support or an area of resistance, right? So we are finding ourselves looking at things such as, our breakers, our BOBs, our trend lines, fake outs, fair value gaps, etc., right? Now, inside an area of support, this is just simply an area to where we would like to see price have some sort of a bounce, right, towards the upside. And an area of resistance, this is simply an area to where we would like to see a bounce towards the downside, right? So it is more the principle of, when it comes down to an area of support or resistance, right? Now, I want to say, I want to put emphasis actually on the word potential, right? And likely, because nothing inside trading is guaranteed, right? It's not guaranteed that we are going to find ourselves tapping within our point of interest and have a reaction from that area right over there, right? But there is certain things that we are or can find ourselves looking out for within those areas to be like, there is a possibility for us having somewhat of a reaction from a specific point area, right? But most importantly, it is a specific area within the market to where we can be like, we can potentially have that bounce to the upside or towards the downside, right? So 110% correct when it comes down to your definition as well, that we are going hand in hand with each other right there. So the criteria of a point of interest is the following, right? Most importantly, most importantly, that little message which I'm sending in the mornings where I'm like, follow your rules, right? Look for an area of liquidity, follow market structure, etc., right? I'm basically saying that everything that we are going to find ourselves make mention inside this exercise or this session whatsoever should be within your trading plan, right? It needs to be part of your trading plan because this is how we are finding ourselves participating in with price, right? So first of all, we are looking at market structure, right? Bullish, bearish market structure. Now, to make things a little bit simple, that 9 times out of 10, or when it comes down to price action in general, right, in market structure, there is only two things that you are going to find yourself doing, or three things if you want to look at it like that, right? First of all, you're going to identify what is market structure, right? If you're going to be like, okay, cool, we are bullish in market structure, right? 9 times out of 10, when we are overly extended towards the upside, right? We 9 times out of 10 find ourselves looking on taking price towards the downside. So in the back of your mind, you're gonna be like, hey, am I participating within what? Am I participating within the correction or am I participating within the impulse, right? And 9 times out of 10, if you are going to identify price as being bullish in structure and we are overly extended towards the upside, you are going to participate in some beautiful, beautiful shorts, basically saying that you are participating within the correction, right? Now, keep in mind that this would be on a higher time frame, right? This will be on a higher time frame because I do know that many would most probably be like, nah, I don't want to find myself participating in a correction, right? Because what am I going to get out of a correction? Just want to make mention that it is a higher time frame, okay, or on a higher time frame. That's why we always find ourselves looking at our H4, H2, and our H1s, right? And mostly our H1, as this is an actual, an intraday time frame. So we are basically moving based off these time frames, our higher time frames, right? So on a high time frame, we do have more pups, which we can find ourselves participating in. And then on the lower time frame, you know what, we are just simply waiting for our point of interest. And you know what, we just want to find ourselves executing price, right? So that is for a bullish market. And the exact same thing goes for a bearish market as well, right? If you have identified that we are bearish in market structure and we are overly extended towards the downside 9 times out of 10, you are going to be looking for some beautiful longs, and you are 9 times out of 10 finding yourself participating within the correction, right? And yeah, you know, if you are seeing that we are overly extended towards the upside inside a bearish market, this could 9 times out of 10 mean that you will find yourself participating in the actual correction, well, in the impulsive move back towards the downside as well, right? So within market structure, all you have to find yourself identifying is that, hey, are we bullish? Are we bearish? Right? Am I finding myself participating in a correction, or am I finding myself participating in a impulsive move towards the upside or towards the downside, right? That's why you will always see that when I leave a runner, it will basically just be me saying that, hey, okay, cool. You know what? I am participating in impulse. So there is a high possibility for me, you know what, gaining some extra pips towards the upside or towards the downside, right? So that is for market structure. Super, super, super duper important for you to identify that, right? And then we are going to look at buy side and sell side liquidity. Buy side and sell side liquidity, if we can just look at the word liquidity itself, that is a pool of money, right? A pool of money. So whether this is above or below P8, right? Nonetheless, this is often where we have some large orders, right? Resting. Now, if we are basically going to look at some buy side liquidity, you know what? All we want to identify is the following, right? So if this is the high of P8, let's say we have a beautiful push to the upside, this is your wicks. So all you want to see price do is have that high and have a lower high to the left and a lower high to the right, like that, right over there. That is your swing high, right? So your buy side will be above price right over there. Ultimately, you want to see buy side being violated, have your pool of liquidity being tapped into, and then have a beautiful shift back towards the downside, right? And same thing goes with your sell side liquidity, something like that, right? So if you are coming in a downtrend, keep in mind, once again, you know what, it's not a course. I'm not going to find myself going into depth when it comes down to a swing low or a swing high, right? But I'm just trying to put it back as an initial framework, right? So a swing low, all you want to see price have is your beautiful low right over there with a higher low to the left and a higher low to the right, just like that, right? And all you want to find yourself seeing price do is take out your actual swing low, your sell side liquidity, right? Once again, grab liquidity, grab some money. And you know what? The orders will basically just be institutions, as retail traders whatsoever, right? But mainly important or most important is just simply we are taking out liquidity, we are grabbing some money, right? So that we can find ourselves having an actual pushback towards the upside. Ultimately, that is what we are looking out for, right? And yeah, you know, then we are finding ourselves looking at our breakers, our BOBs, our fee value gaps and inversion fee value gaps, right? And these things, they need to find themselves being untested, right? It should not be tested, right? If it is tested, it's not a point of interest. So if you are seeing a breaker being tested, right? If you see that thing right there and you see it's already being tested, it's not a point of interest no more, right? Because it's already tested, already being used. You don't want to use something that is already being used, right? You want a fresh one. Same thing when it comes down to an actual BOB as well, right? If you see prices creating your BOB like that, and you are seeing a wick being pushed within your BOB whatsoever, it is not a POI no more, right? It's not a point of interest no more. It needs to be untested. And same thing goes with an actual fair value gap as well as an inversion fair value gap, right? So when it comes down to me, you know what, doing my weekly breakdowns, etc., right, you can always find yourself using that as a reference as well, right? Because I mean that is in real time, it is where price is finding itself being at, and then you will see that, you know what, 9 times out of 10 the areas that we are finding ourselves boxing out, you know, price is actually bouncing from those areas, right? Something is happening within those areas right over there, and you will see that, you know what, these areas are simply breakers, BOBs, fair value gaps, inversion fair value gaps, equal lows, equal highs, whatsoever. But most importantly, those are areas that is untested, right? So within those untested areas below or above price, you know what, we are looking at price to potentially serve as a support or resistance to basically have some sort of a bounce from these regions right over there. Okay, from these areas specifically. A breaker, POB, fair value gap, or inversion fair value gap. Do you have any questions whatsoever? Any questions?
No, we are good. We are good
You're
at this
good.
point.
All right. So let's go to the next slide. So to make things easier, right, I just simply found myself just using this week's POIs, which we find ourselves sending through on the Discord, right? And you know, just to be like, you know, it's not cherry picking or anything like that. It's actually the all you have to find yourself doing is just be participating in with PA, right? So this was Monday, right? And this was basically the point of interest. Now, you know what? We don't know where price is gonna find itself going. That is one thing you need to take into consideration, right? If you are maybe gonna be like, hey, but you are saying that, you know what, price can potentially find itself having a bounce from this area or from that area. You must, and you know what, price is finding itself tapping within the area, and then it actually has a bounce from it. You may be like, you must know that, you know what, something is gonna find itself happening. You know price is gonna go there. No, I don't know price is gonna go there. Right? I don't know that price is gonna find itself going there. Why am I finding myself boxing out these areas? Simply because I found myself identifying market structure. I found myself looking at buy side, sell side liquidity. I found myself looking at untested breakers, BOBs, or fair value gaps. That's it, right? That's it. That's all, right? You don't know. All you can find yourself doing is simply just being reactive with PA, right? So, looking at what we have found ourselves creating over here is the following, right? We can simply see that we are having a beautiful shift back towards the downside, beautiful impulse, right? And then we can see we had a beautiful correction. We came back down, and then we can see that we are finding ourselves, you know what, taking out the high right over there as well. So we can clearly see that we are having what? A change in market structure,
Structure.
right? We are changing market structure. So my question to you now will basically be, if we are going to find ourselves having that shift back towards the upside, back into our point of interest, right? And we can potentially see price have that shift back towards the downside. What are you participating in? Are you participating in the impulse, or are you finding yourself participating in the correction? Which one?
As in at this point, where on the chart the price is, I see it as a correction.
110% correct, right? It is. It is a correction. Simply because if we are going to look at market structure, right? We all do know that if we are going to point out market structure, you know what? It will always look like this clean. But inside the charts, it's not this clean. Right? It's not coming
Yep.
forth as this clean. But once again, right, it's the principle that matters. If you are seeing price having that high, creating that higher high, higher high, you are expecting price to have a pushback towards the downside to find itself doing what? To come and create a higher low for the next impulsive move back
Yep.
towards the upside. right? You are expecting price to do that. And where can you potentially see that, what higher low find itself coming through? At the midpoint, at least, right? If you are going to get out your FIP from point A to point B, right, it should at least be back into the 50 percentage right over there. So basically, it's just saying
Mm.
from a premium to a discount, from a discount to a premium. Simple terms, right?
Premium.
Simple terms like that. So, yeah, that is it when it comes down to your market structure, right? So you can see that we are changing market structure to bullish. So you would then find yourself participating in some beautiful, beautiful shorts, which is coming through as your correction, right? So let's scale down to our 15-minute time frame, right? So let's look at what found itself happening once we actually had the tap within our actual point of interest, right? So one thing we can see is that, hey, looking at market structure once again. So we are just simply going to find ourselves be focusing on this right over there. On a higher time frame, we already identified that, what, we are having this happening on our H4, right? We can already see that we are finding ourselves, coming back into the actual, the discounted area
Mm.
whatsoever, right? So we are going to find ourselves focusing on what's happening right there. And what we can see price needs finding itself doing at this current moment is the following. Once again, identify market structure as well, right? You're not just going to identify market structure uh, on your higher time frame. You're going to do this on the lower time frame as well, right? And as you know, major areas, minor areas, right? Everything from your 15-minute time frame upwards, those are basically being considered as your major areas of liquidity, right? Everything lower,
Yep.
minor areas of liquidity. So one thing you do want to see price do is take out a major area of liquidity first, tap into your point of interest,
Mm.
have some sort of a change in market
Mm.
structure on your lower time frame, basically taking out minor area of
Mm.
liquidity, and then only you find yourself participating in with price, right? So looking at our 15-minute time frame, looking at structure, we can see that we are having a beautiful, beautiful low. We can see that we are having a
Mm.
lower low right over there as well. We can see that we are
Mm.
having that beautiful high right over there as well. We can see that we are finding ourselves sweeping out liquidity. We are tapping within our actual BOB. We can look at this as a potential, what equal high price is finding itself, creating whatsoever. So with you seeing that we are taking out liquidity right over there, you are expecting price to have some sort of an actual pushback towards the downside, right? Now, yes, you are
Mm.
looking at price in hindsight, right? But if you are simply going to look at what we are creating over here, sell side liquidity being taken, buy side liquidity is being taken, right? So you are going to get out your Fibonacci from point A to point B like that with a tap, right? And all you simply want to see price do is to what? Come from that premium into an actual discounted area for a further continuation move back towards the upside as we are still bullish in market structure. So now let's dive into the lower time frame. We now already saw that we are tapping within our points of interest, right? What can potentially happen from this area, or what should we be looking out for when we find ourselves tapping within our point of interest? We need to see a change in market structure, right? So like we made mention,
Structure.
if I maybe can do following, uh let's maybe do something like that, and yeah, let's just do something like that, right? Will I be able to do that? Okay, let me just do it like this. Boom, boom, boom. Cool, right? So we are now seeing a breaker right over there. Bang. We maybe see
Right.
some equal highs, some equal highs coming through over there as well. That so we basically want to see price have somewhat of a pushback towards the upside. Let's say our New York open is finding itself being around about this region right there. Right. And this is, let's say, our 15-minute time frame. Right. So the moment
Mhm.
we are finding ourselves taking out liquidity, tapping within our point of interest, now we can already be like, okay, cool, what is happening, right? Keep in mind that your higher time frame confluences, you also need to take that into consideration. But let's say, for instance, we are bullish in market structure, right? We're bullish in market structure. Price is on a higher time frame, overly extended towards the upside, right? You need to see some sort of a pushback towards the downside, right? You need to see price potentially come and create that higher low, right? So on your lower time frame, 15-minute time frame, we are taking out liquidity. So market structure is already being identified. Liquidity is being taken as well. Equal highs, you do know if we are creating some equal highs, we have liquidity resting above these areas. So you are expecting price to have some sort of a pushback towards the downside, right? You have identified that we are having a breaker above price as well. And what should that breaker be? Should it be tested or should it be untested?
No, it should not be tested.
Clean stuff, right? And you have found yourself identifying an untested breaker as well, right? So now all your confluences is being ticked off, right? So now you are finding yourself tapping within your point of interest. So now let's say, for instance, you are scaling down to your 1 minute time frame or your 2 minute time frame. Honestly, it doesn't matter, right? But the one you see more clear. So on the 2 minute time frame or 1 minute time frame, you will basically see something like this most probably finding itself happening. Something like that finding itself happening. So now you are tapping within your POI inside your point of interest. What should we wait for in a situation like this? What do you think what should we be waiting for? What do you think?
Market structure break at 1 minute.
And stuff. Right? That's it. You just want to see price go hand in hand with your bias, right? In wanting to see price have some sort of a shift back towards the downside based off the confluences you have found yourself building up, right? So once you are seeing us having that change in market structure, all you are waiting for is price to come back into your point of interest, that your entry model whatsoever, and have that beautiful shift back towards the downside, right? So on your lower time frame, now we are finding ourselves taking out minor areas of liquidities, right? Minor area of liquidity, and then see that change in structure so that we can find ourselves having a shift back down, right? Because your higher time frame is going hand in hand with it. So once again, let's look at what's happening right over here. So all we are simply going to find ourselves doing is monitoring those beautiful corrections, right? So, like we made mention, all we want to see price do is just have a change in structure. That's it, right? We are tapping within our POI. We just want to see that beautiful change in market structure. All right. So, right there, we can clearly see that we are doing what? We are finding ourselves having a break of market structure. We're continuing in market structure. Right over here, we have some beautiful sell side liquidity coming through, which we find ourselves breaking below. Right. So now we can establish that we find ourselves taking out buy side liquidity right over there. And we find ourselves tapping within our PO in our point of interest, right? POI. We then find ourselves taking out sell side liquidity, but not only did we find ourselves taking out sell side liquidity, but we also find ourselves changing market structure, right? And with us basically changing market structure, we find ourselves creating a beautiful, beautiful breaker as well, right over there. We had the closure below our breaker, and all we want to see price do is come all the way back up, back into our breaker for a beautiful shove back to the downside, right? Now, one thing you can find yourself doing as well is basically just grab out that FOB from the high to the low, right over there. And all you want to see price do is what? Come from that discounted area into a premium area for a potential shift back down, right? So your midpoint will basically be somewhere over there, right? And you are, or you can see that your breaker is finding itself lining up within an actual premium area right over there as well, right? So your trade will then simply find itself looking something like this. All right. From that high, point A to point B, price is now coming from that beautiful, beautiful area of, discounted area back into your premium area. and your premium area is finding itself lining up with your breaker as well, right? And that is you finding yourself going short with price. Any questions whatsoever?
We are clean. We are good.
You with me? You with me? Cool.
Yep.
Cool. Right. And ultimately, all we are finding ourselves doing at this point is just simply looking at what we have found ourselves doing throughout this week, and just showing you where I'm coming from when it comes down to a point of interest, right? So this right over here was basically the following days, like Tuesday's point of interest, right? We had a fake out from our inversion fair value gap right over there. Yeah, this image is not too clean, right? Simply because it is a screenshot. But yeah, we had a fake out from our inversion fee value gap right over there, right? So let me go to a cleaner one right over there. So right over here as well, right? We can now simply see that, hey, we had a beautiful shove back down, change market structure, went to bullish, came back for the retest, created that higher high, came back for a pullback, right? That would be your correction. We're now finding ourselves having another actual impulsive move back towards the upside right over there. Now, my question to you would be once again, what are you finding yourself participating in when price found itself basically tapping within your point of interest? Are you participating in some beautiful, a correction, or are you participating in a impulse?
So I'll be participating in the correction at this point.
Nice. Right. So you will then find yourself participating in the correction. Right. Now, the reason to why I'm basically pointing that out is simply, if you want to find yourself having that runner in, right? If you know that you are finding
Hmm.
yourself participating in a correction, do you necessarily want to find yourself holding a trade for a long period of time? Yes or no?
No.
Yeah, like if you know that we are finding ourselves participating in a correction, there's a high possibility for us then having, a
Mhm.
further continuation move back up,
Mhm.
simply because you are just simply waiting for price to create that actual higher low, right? To just continue inside overall direction. But if you know that we are finding ourselves participating with the impulsive move back towards the outside, would you then say you can find yourself leaving a runner? Yes or no?
Yeah. Yes. Absolutely.
Yes, right. Simply because you do know that, hey, if you are gonna participate in with that beautiful bullish momentum towards the upside, right? If you find yourself
Hmm.
participating right there, at least a high possibility for price basically doing the following, right? You price most probably won't come all the way back down, back to your point of to your actual entry method or your entry point whatsoever, except for if we
Yep.
are finding ourselves changing market structure, right? So you can then find yourself gaining a whole lot when it comes down to you participating within a impulsive move back towards the upside, right? So yeah, diving into what happened once we found ourselves tapping within our point of interest once again, right, is the following. Okay, so let's see what happened. Now there is multiple things finding itself happening at this current point right over here. It may look like a whole lot of messiness finding itself happening, but you know what, there is actual opportunities finding itself happening as well, right? Like we made mention, all we want to see price do is take out those little corrections we are finding ourselves creating like that. There we can see that we find ourselves taking out that correction right there. All right. So we can see that buy side liquidity has been violated. We tapped into our point of interest. We are having a beautiful shift back to the downside, right? So we can see sell side liquidity is also being violated as well. But not only are we violating sell side liquidity, right? But we are also finding ourselves changing market structure as well. So you can grab that for about from point A to point B right over there, right? And your 50 percentage will come through right over here somewhere, right? So you will most probably have your eye out on this beautiful fair value gap we have found ourselves creating right over there. Right. So what is the rules when it comes down to our fair value gaps? You want to find yourself placing your stops at the high or the low at the candle, which basically found itself creating the fair value gap, right? And where would that basically be? That will basically be this high right over there. As we can see, the fair value gap basically started right over there. All right. So that is one area you could have found yourself participating in with price. So you would have found yourself going short right over there, right? Have some drawdown in price. You know what? Be in some profits, come back up in some drawdown, be in some profits, come back up in some drawdown, be in some beautiful profits once again, right? Those are quite frustrating PA, but you know what? In overall, price still find itself doing what it needs to find itself doing, right? It's still find itself opening up everything that we needed it to find itself opening up. Once again, going to a higher time frame, major area of liquidity. What do we have? Buy side liquidity. Did we find ourselves taking out buy side liquidity? Yes, we did.
Yes.
Right? So a major area of liquidity is being violated. Right? So you can already tick that off as well. Right? What you will see price do is have this pushback towards the upside. This right there, it's not there.
Mm,
Right? So what you are seeing is the following. You are seeing this.
mm,
We overly extended to the upside. Buy
mm,
side liquidity is being taken. Point of interest
mm,
is being tapped into, right? So you want
mm,
to see price have the pushback towards the downside. That is basically what you will be seeing on your charts, right? So once we found ourselves tapping within the area, this is basically what price found itself presenting. So what do we want to see price do now? We simply want to see price take out minor areas of liquidities, right? And not only take out minor areas of liquidities, but also have a change in market structure as well, right? So that was one opportunity you could have found yourself participating in, right? A next area was literally this little region right over here as well. As we can basically see that, you know what, we found ourselves taking out buy side liquidity right over there with that wick right over there. We can also see that we did find ourselves taking out sell side liquidity right over there as well. We had a closure below. Not only did we have a closure below, but we found ourselves changing market structure as well. Right now, there's multiple ways you could have found yourself entering over here as well. Looking at this area as being your breaker right over there. Right. So if you're gonna grab your Fibonacci out from point A till point B, that day, your 50 percentage will find itself coming through right over somewhere over here as well, right? So it would be
mm,
still valid to find yourself entering price based off the breaker right over there, or you could have just simply find yourself having your eye out on this beautiful, beautiful fair value gap we have found ourselves creating right over there as well, right?
mm,
So let's say, for instance, you did find yourself entering right from the breaker or from the fair value gap, but however, your entry would be somewhere around about there. Right from the
mm,
breaker, where will your high be? Your high will basically be above that swing high right over there. Or if you want to be
mm,
conservative, it will be at this high right over there. Right. If you find yourself participating in the fair value gap right over there, where will your stops be? At the candle which found itself creating the fair value gap, which is this candle right over there. So your stops will be at that high right over there.
there.
Right. So this would basically be how your trade would have found itself then looking like, right? So grabbing the FIP once again from point A to point B. So all you are looking out for is for price to come from this beautiful discounted area back into a premium area. And from that premium area, you want to see price have a beautiful dip back towards the downside. So can you see that? Yes, you are finding yourself taking, you're not taking the whole correction on your higher
Mm,
time frame, but you are still managing to find yourself grabbing that 1 to 2 ratio, right? Like you can still find yourself having some proper risk management, right? Because at the end of the day, inside our trading journey, that's the only thing that matters, right? Literally, that's the only thing that matters. Having an edge and having to find yourself, applying some proper risk management with your edge as well. And an edge is literally something that's finding itself opening up on a day to day basis, right? These things are finding itself opening up on a day-to-day basis, right? And if you don't believe me, there's literally a whole lot of proof backing me up as well, right?
Mm,
So these things are literally finding itself opening up on a day-to-day basis, and it literally remains the same on a day-to-day basis as well, right?
mm,
How we approach it, it literally remains the same, right?
mm,
So yeah, this would have then found itself being your opportunity. You would have found yourself participating, right? You would
mm,
be in some beautiful well, you will be in some drawdown,
mm.
profits, drawdown, take profit smack, right? Beautiful, beautiful. Do you have any questions whatsoever with what we made mention?
Uh, in terms of highlighting or identifying the point of interest, for the first one, I was clear. But for the second one, where we used inverted fair value gap, if you zoom out, um, I'm I'm kind of thinking if the price already have moved through that inverted fair value gap as it did, if
The
you
inversion fair value gap.
yep, the inverted fair value gap. So
Uh,
doesn't that make
which one is that?
uh, the point of interest that you highlighted on higher time frame?
Okay, let's go back to it.
Yep, exactly.
Mm-hmm.
So you see, if I am seeing it like this, that if the price has already gone through this inverted fair value gap,
Mm-hmm.
is doesn't that make it invalid?
No, because we're still inside the area.
Okay,
We're still inside the inversion fib. If we had found ourselves having a closure above this area, right?
okay.
A closure above this area on a high time frame, right? Where we are basically seeing the fake out finding itself coming through. Yes, you know what? Then it would be invalid to find yourself looking for some beautiful shorts, because this can simply mean that there's a high possibility for us then, tapping back into another point of interest right over there, and then
Mhm,
only find itself having some sort of an actual shift back towards the downside, right? So ultimately, what you are finding yourself waiting for is, if we are still traveling within the area, right, all you are waiting for is that change in market structure on your lower time frame so that you can find yourself participating in with price, right? So if we are
mhm,
finding ourselves wicking into it, but we didn't find
mhm,
ourselves having a closure above, it's still valid, right? If we are coming back into it over there once again, right, it's still valid, right? All you are waiting for
mhm,
is that change in market structure. And if you don't see the change in market structure, you don't have an
mhm,
entry, right? And this simply means that 9 times out of 10, your actual execution or your point of interest would be invalid. We are going to find ourselves then having a further continuation move back towards the upside. Okay,
makes sense. Makes sense.
clean stuff.
Makes sense.
So that right there, right? Beautiful, beautiful, beautiful PA, which we then find ourselves opening up. And can you see literally it's the exact same thing each and every single day, right? Identify
Mhm,
market structure. Number two
mhm,
will be what? Buy side, sell side liquidity. You want to see
mhm,
major area of buy side or sell side basically being taken out. After that, you are finding yourself identifying an untested BOB, untested breaker, untested fair value gap, inversion fair value gap, fake out, whatsoever, right? We literally have a whole list. And when we find ourselves taking out buy side, sell side liquidity, tap into our point of interest, all we are waiting for on a lower time frame is a change in market structure so that we can
yep.
then find ourselves participating in with price.
Yep.
That's the call, right? That's literally the call. So this over here will then be on Wednesday, right? This will be Wednesday's PA.
Mhm,
And yeah, once again, it's not clear, but just for the simple sake of that, it's coming from our actual community whatsoever, right? I'm just simply using this right over there. But ultimately, right, we had some equal highs coming through
mhm,
right over there. And with us basically having some equal highs coming through, we had an untested area of supply above price on our actual lower time frame, right? So once again, my question to you will now be the following. Once again, right? If you are
Mhm.
looking, and this is literally what we had, right? If price is gonna find itself having the shift towards the upside, and we
Yep.
are finding ourselves tapping within our area of supply right over there, what are you finding yourself participating in now? Are you participating in some beautiful, well, in an impulse or a correction?
Correction.
A correction, right? In a correction, like you can literally ignore everything that is finding itself happening over here below price, as you know what, obviously those are also points of interest, right? But if you are just gonna keep it simple, you know what, you are seeing us having a beautiful, beautiful, you know what, higher high.
Mhm.
We are finding ourselves coming back for a higher low. We are now finding ourselves wanting to create the higher high. We then want to see price come back for a potential higher low.
Mhm.
Right? That is basically what you are finding yourself having in the back of your mind. Yes, we can find ourselves coming all the way back down, back into our equal lows as well. Right? But ultimately, you want to play it safe, right? You are looking for safe havens. If you want to find yourself being brave and wanting to keep that actual runner back into your equal high, equal lows, you know what? That's perfectly fine as well, right? But ultimately, this is what you're gonna have in the back of your mind. Because keep in mind, nothing in trading is guaranteed, right? Nothing is guaranteed. That is most important. All right. So let's scale in on our 30-minute time frame and see the picture a little bit more
Uh,
clearly.
quick question. A
Mhm.
quick question on the
Yep.
last. So, is it more safe, or putting in other words, is it our strategy to always enter a trade on a correction and not on the impulse?
On the correction and that. No, no, no. It's not nothing like that, right? Nothing like that. In this actual example, right over here, it just so happens that you know it's in a correction.
Okay,
Right, it just so happened to be
makes
that
sense.
it
Makes
was in a correction, right? But it's not safe or not unsafe whatsoever, right? It's just simply in this, for this week we just found ourselves catching some corrections, that's it, right? But if you are
makes
finding
sense.
yourself seeing us coming back into like a point of interest below price, right, for
Mm,
some beautiful longs, then the same thing applies as well, right? It just so happens that we had some corrections this week. That's it.
makes sense.
And nine times out of ten, you know, this was basically our during our trading hours, right? During the New York Open. All right. So let's look at a clear
Mhm.
picture. 30-minute time frame. Once again, the exact same thing. Market
Same.
structure. We have identified market structure, right?
Mm,
Buy side, sell side liquidity, right? We want to see major area of liquidity is being taken out. Major area of liquidity is what? 15-minute time frame and upwards, right? Minor
yep.
areas, 15-minute time frame, lower, right? So
Yep.
after major area of liquidity is being taken out, you want to see price come back into your POI, your point of interest, which is untested, right? Nine times out of 10, it would be a breaker, it would be a BOB, it will be a fair value gap or inversion fair value gap, but we also do have other factors we are looking out for, right? But nine times out
Mm,
of 10, it would be those things right over there. So once price is
mm,
finding itself tapping within your point of interest on your higher time frame, right? This is simply where you want to find yourself waiting for your minor areas to find itself having a changing market structure so that you can participate in with the shorts, right? So 30-minute time frame, we had some equal highs coming through right over here, and I think it came through on our actual 5-minute time frame right over there, right? And what do you know about equal highs? We do know that we do have liquidity resting above, so you are expecting price to have a reaction in the opposite direction, right? And what are you going to find yourself looking out for next is simply an untested magnet, which I basically found this on the 10-minute time frame, right? A beautiful, beautiful area of supply, right? Or a breaker, you know, it honestly doesn't matter. You would still come to the exact same conclusion. But ultimately, we did find ourselves taking out our buy side liquidity, which is not just buy side liquidity, but a major area of liquidity that we do have an untested area above price over there as well. We already found ourselves identifying market structure as well. So we basically said that if this is the impulse, we are simply going to find ourselves participating in the correction, right? Which will basically find itself coming all the way through there. And we can see that price basically find itself coming all the way back down, taking out our equal lows. What do we know about equal lows as well? We have liquidity resting below price right over there. So, you know what, there's a high possibility for us then having a shift to the upside from this area onwards, right? Having that actual impulsive move towards the upside from that area onwards as well. All right. So let's find ourselves diving into when we've actually found ourselves tapping within our POI, our point of interest, right? So I'm gonna leave this one for you. Can you maybe find yourself breaking down in what you are seeing on the charts right over here before I find myself doing it? Okay, let's start from here. Let's start from A, and then we can work
Okay.
ourselves all the way back down till this area.
Okay. So from A, point B would be the exact point where the equal highs were grabbed.
Mhm.
Yeah, this would be the point B, and then a little correction, and then the point C would be where it touches the point of interest. Okay,
Mhm.
and the point D would be a little correction after that, the lowest point after point C, and this would be, I would mark this area to be my lower low, higher low, sorry. Yeah. And then the next point would be the next high. Yeah.
Mhm.
And I see the market structure to be broken when the price goes and closes below my higher low.
Right there. Bang.
Yep.
All right. Nice.
Yep.
Okay.
So that's a market structure break for me.
Mm-hmm.
Exactly.
Right there. In market structure shift. Okay.
Yeah.
And then how would you then approach price after this?
Yeah. So
After
then
seeing
we have,
the shift.
then I'll use and employ the fib levels
Okay.
from the highest point till this
Will it be
uh
this point
till
A
this candle
or point B?
from point B.
Okay. Clean stuff from point B till where?
From point B all the way to the last candle that broke market structure.
Right there. Point C. Clean
Yep.
stuff. Clean stuff. Clean stuff. Clean stuff. Okay.
Yeah. So from that, I would see what fair value gap or BOB do I have sitting right next to the 50% fib level,
All
as
right.
in this above 50%. And that would be my point of entry for my trade. And my stop loss would be at either B
Mm-hmm.
or the candle making that fair value gap,
All right. Which will be which one? This
which
one.
will be, yeah, exactly, this red one.
All right. Right there. All right. I am. I'm satisfied with that. Is there more that you want to make mention?
Um, Another thing I am thinking of, instead of the fair value gap, we can also enter from a breaker block, which I am unable to see at this point.
Okay.
Yeah, that's it.
Right there. Clean.
Okay.
Clean. Right. I'm satisfied with that. I'm satisfied with that. Is there anything more?
Nope.
No. All right.
That's all from my
That's
side.
all. Nice. 10 out of 10, right? 10 out of 10. Because you know what? Once again,
Hey.
ultimately
Mhm.
we just following those corrections, right? Impulse, correction, impulse. Boom.
Mm,
We breaking,
mm,
right? We are breaking right over there. We are having that change in market structure, right? So we are
mm,
finding ourselves taking out buy side liquidity once again, right over there.
mm,
We then found ourselves breaking our sell side liquidity. Not only did we take our sell side liquidity, but we also had a change in market structure as well, right? And with us having that change in market structure, we can grab our FIB from point A till point B, where we basically created that lower low right over there, 110% correct. And then we want to see price come from a discounted area into a premium area, right? And our 50 percentage will be around about this area right over there. So we can see that we are having a breaker coming through right over there as well, right? Which is still lining up within the 50 percentage, as well as, you know what, we are having a fair value gap right over there, well, which is coming through in the premium area, right? And we can see that we are having a fair value gap right over there as well, which you can simply find yourself using as a point of interest as well. But me, Diego, personally, right, I would then just simply find myself looking at the breaker, which we have found ourselves creating right over there, right? So to be safe, you can simply find yourself placing your stops above the high right over there. Or if you want to be more conservative, basically just placing your stops above or at this high, which we have found ourselves creating right over there as well, right? So your trade would then simply look something like this. From your actual breaker right over there would be your entry. You would be running in some drawdown right over there, but ultimately you would find yourself, you know what, taking price all the way back down, back into your, you know what, take profit area right over there as well. Do you have any questions whatsoever?
Nope, we are clean
Right.
so far. Yeah, we are
Nice.
good.
Right. So that right there was basically the end. Right. And the main reasoning to why I'm also finding myself showing you this is simply, you know what, you have to look at price in hindsight first
Mm, mhm,
before you can find yourself, you know what, forward testing it. So you have to gather
mm,
some data first before you can actually find yourself forward testing this, right? That's why it is super, super important for you to find yourself going through your course, right? Your course should be something that you know thoroughly, right? You should know
mm,
it thoroughly. Your educational sessions, you should know those content thoroughly as well, right? And then you will realize that your daily breakdowns is just simply
mm,
proof that what we are finding ourselves doing within the market is actually finding itself repeating on a day-to-day basis. As you will see, right? The
mm.
strategy itself is not changing, or am I wrong? Is it different things
No,
each and every single day?
the steps are exactly the same every day.
Every day, right? Well, okay, not every single day, but most of the time, right? Because there's
Mm,
times that we're not simply gonna get our actual our entries, right? But
mm,
ultimately our methodology it remains the same on a day-to-day basis. Right. And those
mm,
daily breakdowns is just simply there for you to just see and just have somewhat of a framework in how we are
mm,
finding ourselves participating in with price. And I mean, it is hours on hours of content. I do know it is a lot, but yet again, you know what? When it comes down to trading, you need all the data necessary for you to be like,
mm,
hey, is the strategy for me? Is the strategy not for me?
mm,
Right? I would rather find myself giving you more than enough to be like, you know what?
mm,
This is how we are finding ourselves participating in it on YouTube
mhm,
as
mhm,
well, right? As a reference to what we found ourselves doing on the well today as well inside the session, right? You can also find yourself looking at my weekly breakdowns, the entry content as well, right? Everything remains the same,
same.
right? Everything we
Yep.
spoke is the same, right? And
Mm,
that is the advantage of you basically having an edge in the market, right? And actually being able to find yourself, you know what, thinking a little bit more, you know, just
mm,
keeping things simple. Because in my head, this is the simplest methodology ever, right? It may not be for you or the next person whatsoever as simple as if
yeah.
now, but if you are finding yourself repeating and practicing this, right, it will then eventually find itself being like a second nature for you, right? It will become a little bit easier. And it is super important as a trader to also find yourself knowing that you are not always going to find yourself being right, right?
Mm,
You're
mm,
not
mm,
always going to find yourself being right. You are going to be wrong at times as well, right? But ultimately, your edge your risk management, that is basically all you need when it comes down to your trading journey. So I hope that you have enjoyed this session.